Hey everybody, Coburn Sheppick here from Limited Partners Club. I hope you're having a fantastic day and week. It's December 1st. Hope you had a fabulous Thanksgiving holiday. I know I'm still wearing off the turkey and all the wine. Other than that, I'm doing fantastic. So I'm excited about our meeting today. We're going to be talking about deal sourcing, especially in today's environment where there's a lot going on in the economy and, specifically in every asset class, specifically real estate, the good deals are harder to come by in today's world. And that's because things have gotten so hot. And so the line between good deals and bad deals have become blurred, especially to those who are new, whether they're operating, they're buying, or they're investing on the passive side. And so there's been a lot of risk taking over the past, primarily the past few years, where investors are paying top dollar for assets in not so favorable. Got something here on my screen. 1 second. In not so favorable locations. So I'm excited about this meeting today, deal sourcing. Some of the topics that we're going to be talking about, we want to just cover quickly, the state of the market, what's going on. Then we'll dive into our topic today of deal sourcing. Then at the end here, I've got an invite that I want to share with you that I'm excited about as we're launching this community. And so as far as, what's going on in the market, as we all know, interest rates have climbed tremendously this year. Looking at historically, this is one of the fastest rates of rates of increase in the amount of time. So 375 basis points year to date, and we just heard Powell's speech yesterday talking about inflation, talking about the economy, what he sees, what the Fed's looking at as far as what's to come. And so we expect more rate hikes this month and early Q1, as well as continuing to hold the pressure throughout next year. So these higher rates, which looking at historically are still low, and there's an angle of that rates could continue to climb higher. I don't think that we'll see as much as the aggressiveness that we've seen this year, where things could really get ugly and twist things around. But I think we'll definitely, it sounds like we'll for sure see to the Fed to continue to hold the pressure, hold rates, somewhere around where we're at today throughout the majority of 2023 to get inflation, to get hold of the inflation problem. And so inflation is still an issue. It affects everybody. It affects mostly the middle class in groceries and gasoline and especially housing. In housing, we're not talking about residential in today's meeting or in our calls, but the housing market plays a huge role, as you know, in our economy, and the market got way too out of hand. And so the Fed is looking at that and wants to get a hold of that and bring there needs to be an adjustment. It's out of whack. And so by lifting interest rates, putting pressure on the demand side, naturally things are going to soften. And we're absolutely seeing that in almost all markets where houses are sitting longer on the market. I mean, everything is obviously in perspective here, or relative, but looking at from over the past recent years, the past year, the past 2 years, everything is still performing fantastic, right? And so when we see the declines that we're seeing today in values, in days on the market and some of the statistics like those, it looks very ugly compared to what we've seen in the past 18 months, 24 months, where values and rents have skyrocketed in the 20-30% range. So of course, what's going on now seems extreme to what's happened the past year, but based on where we should be, looking at the last decade, we still have a lot of room to go as far as what needs to be adjusted. And so the Fed is going to continue to hold rates elevated for longer than I think people, of course, would want. And the whole point of this is to keep inflation down, to not let what has happened in the history, to not let this thing get out of hand, which it potentially is already. And so the question is, are we in a recession? Are we going into a recession? The possibility of a soft landing here is very slim. And so I believe that we're already in a recession. We're heading into a recession right now. I think we'll definitely see this to be announced in the coming months. And the best approach to all of this is, of course, there's going to be people and families that are going to be affected by this. And it's a sad thing. People have taken on risk. People have taken on too much debt. And there's going to be absolutely people that are negatively affected by this. But the world, and the best perspective of this whole thing is that this is just another cycle, and the world and the economy and the markets work in cycles. And so sometimes people get on the bad side of this. And if you are, I'm sorry, but there's going to be great opportunities that come out of this. And, we'll get into it later in our topic. But again, as you know, some of the biggest wealth that has been created has been acquired during a recession. So in real estate and in a lot of investments, you make money when you buy, right? And so we're going to be starting a new cycle, and there's going to be fantastic opportunities. And I said this on our previous call, these opportunities they're likely to come. It's mostly a matter of time now for when they do come, but these types of opportunities really only come, a very few times throughout our lives. And so whether you're on the negative side of this cycle, meaning that things might get hard for you, you might be affected, you might have some losses, or if you're on the other side, regardless, to be prepared for what's to come is the best approach to take, because this is another cycle. It's going to happen again, but this one is going to be, opportunities like this don't come very often. I'll just say that. So let's jump into our topic today of deal sourcing. And what we're talking about here is for investors that are seeking opportunities, what to look out for based on what's happening in the market and what their goals are. And so there's a few topics that I want to talk about, and we're not necessarily talking about real estate in particular. This could be any private sector, venture, private equity, private businesses, real estate, private credit opportunities, all the above. And so as an investor, the first thing to look out for in this environment is what's happening, for one, and what opportunities are going to come for this, and then deciding what strategies you want to take based on where you're at personally, and what interest you have. And so we can't do it. Any of us can't do it all, right? And so to define what sectors you want to focus on based on the the risk profile that you have is, the most important thing. So we're going to see a lot of distress, a lot of opportunistic opportunities come up. There's going to be a lot of consolidation in all sectors. And so that's one strategy that, again, is not going to come very often. And as far as distress, it only comes, every so often. Real distress, not physical distress. We're talking about bankruptcies and foreclosures and properties. We're already seeing them go back to the lenders. And people that have bought property, for example, you can tell who the flake buyers are already by offering seller financing and some of these different creative tactics to get these deals off their balance sheets. And so we'll see more of that to come, and that's just the beginning of it. So the real distress will come in the coming months. It's a matter of time again. And the best time to get into these deals. I was on a call last week or 10 days ago or so with some fantastic people, and someone said, the best time to enter a building is when it's smoldering. Okay, this is after the fire is out, after the bodies have cleared, after the bankruptcies have cleared, but the property is still smoking. Okay, so the problem is taken care of, but this is the perfect opportunity to enter this, because we're at the base, the best buy-in possible, and have a whole cycle ahead of us to perform. And so understand, the sectors that you want to go after, whether it's a specific real estate asset class or a specific venture, and that goes along with what type of risk profile that you have as an investor, whether it's more opportunistic, higher risk, or more security, more stabilized. And depending on those, this will lead to, how you can actually source these opportunities. And we'll get into that in a second. Secondly is the markets. People are biased towards specific markets. Some aren't, but most are. And so get clear on, passive investing in private opportunities there's homework to do. It's not like, you don't have an advisor. You don't just pick, they don't just allow somebody to put your capital wherever you can. But most people want to understand what types of deals and what specific markets they're going into. And so I would advise people to get super clear on what markets they're interested in. People are biased towards real estate in the Sun Belt for some reason, for obviously in today's environment, and that's because these markets are growing rapidly. And right now, again, in those markets specifically, it's hard to find good deals right now. Everything is outpriced, and we'll see a lot of adjustments. And so right now, we're specifically at Dovetail pens down on real estate while we wait for things to completely unfold as far as what's going on in the greater economy with interest rates and inflation and everything. And so once you can define this strategy that you personally want to take and why, and that means how much capital is going into, how much and whose capital that is, and is it parents' money? Is it your money? Is it money coming out of a job? And so depending on that, will help you define your risk profile and will help you figure out how to locate these opportunities. So operating partners, my role at Dovetail, my main focus is specifically finding and bringing into our network the best operators in each of these sectors, across all sectors that we're interested and focused on, and and building really good relationships with them. One, because we want to be a resource and a partner of theirs in the opportunities that they have and the opportunities to come. And part of that process is qualifying them and understanding the track records and looking at who's involved and looking at the history and looking at the performance and really qualifying operators that we want to put in our network. And so for you in the deal sourcing process is either locating who these operators are, and that's by looking at paying attention to the market, looking at who's closing the deals, who's got the best deals, by seeing publicity, right? By seeing public record, by talking to brokers, by doing the scrappy work that people don't want to do to locate these operators, direct to operators, and get in touch with them and build relationships. Or the alternative is to tap into somebody else's network, potentially like ours, like other equity providers, to leverage these networks, because good deals, the best opportunities are usually first presented to a very select few. These types of opportunities are presented first to immediate networks, starting with friends and family, and then starting with the people that have immediately been involved and that are already involved. And those are the first tight-knit of groups where these opportunities are first presented. So if you can tap into those networks to not to avoid, but to shortcut the process of building relationships with operators. And we're not talking about all operators. We're talking about the best in class operators that are solely focused on the sectors and the profile that you are looking for, that fit your investment strategy. So there's a lot that goes into this, and a lot of people think that the deal sourcing is as easy as, and I just made a post about this. They think it's about, a lot of people think it's about getting on LoopNet, getting on these marketplaces and shopping like you would. I'll say my joke earlier, but shopping like you would on Black Friday. It's not like that. It's way more. It's way more complex. It's much deeper than this. Good real estate deals only come so often. Right now, it's very rare to see an actual good deal. People are buying, paying top dollar for C-class properties in pardon my French, but shitty markets. And they're doing it because they need to keep up the deal flow. They want to pay, they need to pay their expenses. They want to take on their fees. And now the tide is rolling out, and it's going to get very ugly for a lot of people that have been buying up these types of properties. A lot of multifamily deals over the past couple of years now. And so, if you see people buying these ugly apartments out of 5 cap, if you know real estate, they're overpaying for these assets. And so, there's a lot of opportunities that'll come. So deal sourcing is about locating operators, whether through tapping other people's networks or directly to the operator, or directly to the opportunity, that have a history and then have a solid track record and that have gone through at least 2 of these cycles that we're about to go through right now. 2008 would be one of them, that they've experienced what happens when the Fed starts tightening policy. They know what happens when things when there's an oversupply. They know how to buy right. They know their basis. and they know what they're doing, and you want to source opportunities with folks like them. So that being said, I hope this brought some clarity as far as, some of the strategies as far as deal sourcing. We're not shopping here. Some of this stuff takes time. It takes quality networks. And so that being said, I've been working on this project for some time now. We haven't launched yet. We're in our soft launch phase, but we want to create a community here for investors to come together with like-minded people in the space that are interested in investing in similar opportunities. Nothing with a ticker, only private opportunities, real estate, venture, private businesses, private credit. And we want to create a space where the goal of this is to create a space where investors can come together and tackle some of these subjects like we're talking about today, all geared around wealth creation and capital preservation. And so we are going to be doing these meetings regularly. We'll be bringing on some leaders in the space, operators, to talk about their deals, talk about the market. And we want to create a space for investors to come together and tackle these big subjects and share insights, discover some of the opportunities that are happening and that will come. And we plan to do these calls regularly. We plan to do some private dinner events. I'm located in the Phoenix area, and so we want to launch a Scottsdale chapter where we will be meeting in person, and potentially down the road, depending on how things go, we will potentially plan some bigger events. So I want to take this time to invite you into the community. It's a members only community. We'll be doing these calls publicly, but a lot of it will be exclusive once we start growing the group. We have an online sort of platform where you can actually have your profile, network with other people online, as well as some of the in-person stuff that will be soon to come. So the group is totally free. There's no cost. The goal is not to create ever to monetize this group at all. The real goal of this community is to build networks within great people and build quality relationships. And so for me personally, I wasn't born with a great network, and I'm still developing mine. And that's partially why I'm doing this project, is because I've lacked great community in my life, especially being an entrepreneur, because you don't go to a workplace, and I never went to college either. And so, it's important for me to bring together quality people around myself, and hopefully at the same time bring a quality community to everyone that joins wherever you're at in this world. And so if you'd like to join us, we are accepting people now, pre-launch. If you go to limitedpartnersclub.com, you can request to join. We also just launched our meetup group that you can find us on Meetup, where we'll be sort of announcing some of the events to come. You can find us there as well, but the best place to join and actually be a part and get first look on everything that we're doing, and to actually tap into the network and to get first notice for these types of meetings, go to limitedpartnersclub.com and request to join. I'm Coburn Sheppick. I hope this call today brought some value to you, especially during a time like this where there is going to be some amazing opportunities, and I want us all to be on the optimistic side. Be aware, but be optimistic, because these cycles do happen, and we want to be on the good side of things. And so this approaching this cycle, to be opportunistic, to understand what to look for, to be super clear on what you are looking for, we're going to crush it. So thanks again for your time today. I'll see you next time. Bye now.